Good morning everyone and welcome to another RF crypto video. Today's markets has seen a small recovery of almost 4%. Now the global crypto market cap stands at 1.29 trillion. Remember, after Terra and its coins Luna and UST faced its collapse, the global crypto market cap fell to about 1.10, 1.15 trillion, and now it has recovered about 150 billion of that loss and now standing at almost 1.3 trillion. But obviously we won't be satisfied until it's back to the levels which they were before the crash, which were about 2 trillion and above. And 2 trillion is kind of the psychological level that people usually see as the markets are doing well and the markets are healthy. Looking at the price of Bitcoin, it has gone above $30,000. Yesterday it was standing at 29,000. It had gone below the $30,000 psychological level, and we were thinking that, it might go even lower, but the bulls got in the market, it made a steady recovery, and it looks like it's doing well. Ethereum as well made it above $2,000. It's standing still at this price, and right now it's trading laterally. The rest of the market is doing quite well. There is a bit more positive sentiment. As you know, yesterday the markets were a bit shaky, not only the crypto markets, but also the stock markets, just because there has been an aggravation of fighting in Eastern Europe. There also has been the outbreak of monkeypox in Europe and in some countries in the Americas. So that also brought some fears, especially because we're still in a pandemic. We don't need another one. So it was just a matter of fear that brought the markets down and made the price of Bitcoin go down below 30,000. But those fears have been alleviated and the markets are back up to where they were about 2 or 3 days ago. Although it's not ideal that the prices are so low and the market cap is equally so low, it does stand to reason that any improvement is a good thing. Looking at the price of Bitcoin, we had seen yesterday that it fell below the $30,000 support level, and it's actually going and testing the new support level, which was 28,600. However, it couldn't break below it. The bulls got back into the market. We saw 4 green candles, and the price broke above the $30,000 resistance level, which is the new support level, because we see now that the price is trading laterally along this level, and we know for a fact that $30,000 is a psychological level, and the markets are currently trading laterally, because as you can see here, ever since the 11th of May, which is about 9 days ago, the markets are going up and down, up and down, up and down, up and down. But if you look at the average, the middle point or the median point is the $30,000 level. So looking at this chart, we can ascertain that it is trading laterally along the $30,000 level. And this is just because people are consolidating, people are thinking about what's the next best decision. And because the markets are so shaky, they don't want to risk. But at the same time, people know that Bitcoin has potential, so they're holding on to it. And whenever there is a downward shift in the market, we do see the Bitcoin dominance going up. Right now it's at 44.8%. When the bull market was here, it was at about 38%. Not only are people moving their money away from crypto to stocks and bonds, but people who want to stay in crypto move away from other smaller coins or altcoins to Bitcoin and Ethereum, and that's why Bitcoin dominance has gone up. Now meaning that 44.8% of all crypto market cap stands with Bitcoin. So the Ethereum merge is coming in August if everything goes to plan. Ethereum's core developer Preston Van Loon told the panel at the permissionless conference today that there's momentum behind finalizing the move in the next 3 months. As far as we know, if everything goes to plan, August is the time when the merge will happen and Ethereum 2.0 goes online. So what the merge basically is, it's when the current Ethereum blockchain merges with the proof of stake beacon chain. That move will shift the network from mining or from proof of work, which it currently is, where people run powerful computers for the chance to earn Ethereum, and this will move to a proof of stake platform in which Ethereum holders can deposit their Ethereum in exchange for rewards. And proof of stake is being implemented because it has a lot of added benefits. Aside from using much less energy than proof of work platforms, proof of stake consensus should also make it easier to participate in running the network, enabling further decentralization and increasing security. Basically what this means is that if you have a facility where people can just participate in the platform or in the ecosystem without actually having to have expensive computers to mine these coins, they can just buy Ethereum and stake it, and they become node validators. That means that you have a bigger pool of people to validate transactions, which means that it increases decentralization because now there are a lot more people and the power shifts or dissolves into a greater pool, also it becomes safer because of the fact that more people are there to validate the transactions and there's less chance of manipulation of the system. Also, many people are waiting for the merge because it's expected to cut the issuance of Ethereum by about 90%. So now Ethereum is being mined very quickly, the supply is increasing, but when Ethereum 2.0 goes online, Ethereum issuance will go down by about 90%, and less Ethereum in circulation basically means that there is less supply with higher demand, because once it shifts to proof of stake, the transaction times will be lower and the transaction fees will be lower, which will increase demand for Ethereum. And this should push the price of Ethereum up. And this August upgrade is not the last major upgrade planned for Ethereum. A major component of Ethereum 2.0 strategy is sharding, which is a way to divide up its network into multiple chains. So with shard chains, validators only need to run or store data for the shard that they're validating and not the entire network, which happens today. And this speeds things up and drastically reduces hardware requirements, because instead of having the whole network for you to validate, you only have that specific piece of code or that specific transaction that you need to validate, which makes it easier, quicker, and this is what will make the Ethereum platform even quicker than it is now and even quicker than it will be when Ethereum 2.0 launches. In terms of the launch in August, it's not a random date. In early May, Ethereum core developers decided not to upgrade the network to delay the so-called difficulty bomb, which will soon start to degrade the network. So the difficulty bomb is an element which is encoded purposely within the blockchain that intentionally slows down the network. And what is the purpose of slowing down the network? It's just to incentivize and encourage the developers to push forward with proof of stake and make it difficult for miners to stay behind on the proof of work chain after the switch. So it was purposely put there as an incentive to switch to the proof of stake system. So new Tether report shows that there has been a 17% reduction in commercial paper. What is commercial paper? It's basically unsecured short-term debt that is issued by a company. It's just debt that the company issues that is not secured by anything or is not backed by anything. So this is considered to be very risky. A week after its stablecoin briefly lost its one-to-one peg with the dollar, Tether's Q1 2022 assurance report shows that it has reduced the commercial paper and its USDT reserves by almost 17%, which is a good sign. And at the moment, Tether's $82 billion reserve were 86% cash and cash equivalents, and the rest includes $4 billion in corporate bonds, $3 billion in secured loans, and $5 billion in other investments like cryptos. And don't be fooled by 86% cash and cash equivalents, because 37% of this 86% is commercial paper. And this is still a very large amount, and it still accounts for $20 billion of the reserves that are still backing USDT. This means that 25% of the reserves are still commercial paper. And this isn't a good sign, because if there is a depegging, because let's take, for example, in September 2021, when Chinese real estate developers Evergrande and Kaisa were at risk of missing a US dollar bond payment, commercial paper made up 31 billion of the company's 69 billion reserves, so almost 50%. And these are the type of companies that issue commercial papers. And if these companies miss any dollar bond payments, then those commercial papers, they go down in value or they become even worthless, meaning that that 25% that is currently sitting in the USDT reserves as commercial paper becomes worthless. So it is quite dangerous. And if there's a scenario where the commercial paper becomes worthless, then the USDT peg will most certainly be lost. But there is a positive sign, because Tether is currently in a phase where they want to decrease the amount of commercial papers in its reserves. For example, this time last year, only about 3% of Tether's supply was backed by actual cash. And since then, Tether has been under significant pressure to up its cash and reduce the portion of commercial papers in its reserves. And this is difficult because decreasing such large amounts of reserves and replacing it with cash can prove to be challenging. And they are slowly doing so, and hopefully from 25% it goes down to 20 and 15 and 10 and eventually to 0, because commercial paper is not secured and it is quite risky. So Australia's largest bank, Halts crypto trading pilot, says more regulation is needed. So Commonwealth Bank, or CommBank, Australia's largest bank, is putting a brake on the launch of its crypto trading service. And this service was announced in November when we were in a bull run. Markets were doing incredible. Bitcoin was at about 68, 69,000. The service was to enable about 6.5 million Combank app users to buy and sell up to 10 cryptocurrencies, including Bitcoin, Ethereum, and Litecoin. But as events of the last week have reinforced, it is clear that the market is very volatile and it remains an enormous amount of interest. And because of this crash, now the focus has shifted to regulation. And along that volatility and awareness, there is also plenty of interest from regulators and people thinking about the best way to regulate cryptocurrencies. So the Australian government, seeing what has happened to Terra and Luna and UST, now they want to ensure that conducive and safe regulation is in place that will allow the crypto markets to be a safe space and allow customers to trade with low risk or lower risk, the government to maximize tax revenue, and also at the same time for companies to be able to do business in a conducive manner. Combank said that our intention still at this stage is to restart the pilot, but there is still a couple of things that we want to work through on a regulatory front to make sure that it is most appropriate. This means that they're just chatting to the Australian government to make sure that the regulation is in place and there is a set framework in order to ensure that whatever they do is legal and follows that framework. So regulation is good in a sense that it gives companies a guideline on what they can do and what they can't do. And remember, Australia is quite progressive in terms of crypto. In December, the government announced plans to bring the crypto industry out of the shadows with a world-leading regulatory framework. And part of this initiative includes the introduction of a licensing regime for crypto exchanges, with the Federal Treasury currently holding consultations on the matter. And these consultations are open for responses until May 27th. So we can expect the regulatory framework to start sort of taking shape after that, and later in the year for the government or the Treasury to release a proper framework that will ensure that companies can work in a safe manner and it will also protect the customers. So Australia is poised to become a market leader in cryptocurrency in a global scale if they can get this right. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.